Welcome back, everybody, for another deep dive.
Yeah.
This time, we're going to be talking about leveraged ETFs and how they can potentially impact your long-term investment strategies.
Yeah, for sure.
The article that we're going to be looking at is titled Investment Essentials 4, How to Optimize Long-Term Investment with Leveraged ETFs, Keys to Risk Management and Asset Allocation.
Right.
So,
Buckle up.
yeah, buckle up, everybody.
Yeah.
We're about to unpack some serious investment knowledge.
Yeah. Leveraged ETFs are really powerful tools, but they often get a bad rap.
Mm-hmm.
A lot of people kind of shy away from them
Yeah.
due to misconceptions about their risk.
Yeah.
And so really the goal of this deep dive is to separate fact from fiction,
Mhm.
understand really how these things work, and then we're going to look at, how they can potentially fit into a long-term investment plan.
Yeah, so the article highlights QLD, which is a 2x leveraged ETF
Right.
tied to the NASDAQ 100 as a prime example.
And a good one.
It is a really good one. It's fascinating to see how QLD performed during that 2020-2021 period,
Mm-hmm.
while QQQ, the regular NASDAQ 100 ETF,
Right.
gained a respectable 75%.
Yeah.
QLD surged an incredible 180%.
Yeah, that's a perfect illustration of how leverage amplifies those gains, right?
Yeah.
It's not about hitting that exact 2x multiple. It's about maximizing your absolute returns.
Right.
So you're essentially achieving higher returns with that same initial investment.
Yeah, that's a very compelling argument for leverage, but I think a lot of listeners right now are probably thinking, hold on, what about the downside?
Mm-hmm. Mm-hmm.
And the source addresses this head on. They acknowledge that magnified losses during market downturns are a real risk.
Of course, yeah.
So how can we manage that?
Well, the key is to approach leveraged ETFs with a well-defined strategy, not fear,
Okay.
right? And the article emphasizes the importance of disciplined entry.
Okay.
So instead of going all in, consider a staggered investment approach.
Right.
This is going to help you average out your entry price and reduce your exposure to those sudden market swings.
That makes a lot of sense. Instead of trying to time the market perfectly,
Right.
you're spreading out your risk over time.
Exactly.
What other risk management tips does the source offer?
Well, maintaining a cash cushion is absolutely crucial.
Okay.
It's like having an emergency fund for your portfolio.
Mm-hmm.
If the market dips, you can capitalize on that opportunity and buy more shares at a lower price.
So you're actually using volatility to your advantage.
Exactly.
I like that.
Yeah.
That's a perspective I hadn't really considered before. It seems like a lot of the fear surrounding leveraged ETFs comes from this perception that they're inherently uncontrollable
Right.
and risky.
Yeah. And that's where a clear understanding of how they work comes in.
Right.
Yeah. They are designed to amplify both gains and losses.
Yeah.
But the article makes a strong case that with the right approach, those risks are manageable.
And the source also dives into the importance of timing the market, especially when it comes to leveraging strategies.
Yeah.
They talk about utilizing technical analysis,
Uh-huh.
specifically looking for opportunities to buy during pullbacks
Right.
in a confirmed uptrend.
Yeah. Think about key support levels like the 100-day or 200-day moving average.
Right.
Adding to your position aggressively when prices touch these levels, particularly during an upward trend, can be a very powerful tactic.
So it's not just about blindly buying into a leveraged ETF.
No.
It's about strategically entering and exiting positions to maximize your returns while managing risk.
Absolutely.
The article also stresses the importance of liquidity when choosing a leveraged ETF.
Super important. You want to be able to enter and exit positions smoothly,
Right.
especially in a volatile market. So
Yeah.
opt for ETFs with high trading volume like QLD to ensure that ease of trading, and always pay attention to fees.
All right.
Lower expense ratios and minimal tracking error can have a significant impact on your returns over the long term.
Tracking error being that difference between the ETF's performance and the performance of the underlying index.
Exactly.
Okay, cool. So this is really starting to paint a different picture of leveraged ETFs.
Yeah.
It's not just about high risk, high reward.
Right.
It's about understanding how these tools work,
Yeah.
knowing how to manage the risks, and potentially utilizing them to accelerate your long-term growth.
Exactly. It's about shifting that mindset from fear to informed action.
I like that.
The source makes a compelling point about how leverage ETFs can actually shine in prolonged bull markets.
Okay, so that's where things get really exciting.
Yeah.
They use a hypothetical example of a 10-year bull market,
Right.
assuming an average annual growth of 8%
Mm-hmm.
for the underlying index.
Mm-hmm.
In this scenario, a regular ETF would generate a return of around 115%.
Which is a solid return. But now consider this, even if a 2x leveraged ETF doesn't perfectly double that return,
Right.
Due to daily rebalancing and other factors, it could still significantly outperform, with a potential return exceeding 199%.
So almost double the return.
Yeah,
It seems like the article is really highlighting this acceleration effect of leveraged ETFs during extended periods of market growth.
exactly.
But of course, we can't ignore the elephant in the room, bear markets.
Right.
What happens to leveraged ETFs when the market takes a downturn?
It's a valid concern, but, the source provides some interesting insights here. First, it's crucial to remember that bear markets are a natural part of the cycle, and they're often shorter than many people fear.
Yeah,
Especially in the U.S. market, historically, they've lasted no more than 4 years.
that's a good point. It's easy to get caught up in the doom and gloom
Right.
when the market is down. But history shows us that recoveries do happen.
They always do. And the article walks us through a specific example.
Okay.
The 2007-2009 financial crisis.
Right.
While QLD did experience a steeper decline than QTQ,
Uh-huh.
it also rebounded faster,
Okay.
ultimately recovering to pre-crisis highs at roughly the same time as QQQ.
So even though the drop was more significant, the recovery period was comparable.
Exactly. And that speaks to the nature of leverage. It's a double-edged sword.
Right.
It amplifies losses in a downturn,
Yeah.
but it also accelerates gains in a recovery.
It seems like the article is emphasizing that the key takeaway is not to get fixated on short-term fluctuations,
Right.
but to focus on the long game.
Exactly.
The source also mentions some more advanced strategies
Yeah.
for utilizing leveraged ETFs, going beyond the basic buy and hold approach.
Right. They touch on two intriguing strategies:
Okay.
the moving average strategy and the hybrid approach.
Okay.
The moving average strategy uses well-moving averages to
Right.
generate buy and sell signals.
That sounds more active than a traditional buy and hold approach.
It is, the idea is to capitalize on market swings, potentially boosting returns by strategically timing your entries and exits.
Right.
It adds a layer of complexity, but for investors who are comfortable with technical analysis, it can be a powerful tool.
What about the hybrid approach? The article suggests this as a potential option for investors who are not comfortable with the volatility
Right.
of a full leveraged ETF position.
Exactly. This approach involves blending a leveraged ETF with a non-leveraged ETF tracking the same index.
Okay.
So, for example, a portfolio consisting of 50% SPY,
The S&P 500 ETF.
right, and 50% SO, which is the 2x leveraged S&P 500 ETF, could offer a balance of growth potential and risk mitigation.
It's a fascinating way to potentially smooth out the ride while still benefiting from the leverage effect.
Right now, it's crucial to remember that any investment strategy, especially one involving leverage, comes with inherent risks.
Right.
And that's why the source emphasizes effective risk management is absolutely non-negotiable.
Right.
We've already discussed disciplined entry, maintaining a cash cushion. But there's another important aspect we need to address: stop-loss orders.
So stop-loss orders are essentially safety nets, right?
Exactly. They automatically sell your holdings if the price drops below a certain level, helping you to limit those potential losses.
So it's crucial to set your stop-loss levels thoughtfully.
Very thoughtfully, setting them too tight could trigger a sale during normal market fluctuations, causing you to miss out on potential gains.
Right.
On the other hand, setting them too loose might not provide sufficient protection during a sharp downturn.
So it's about finding that sweet spot
Exactly.
where you're mitigating risk without stifling the potential for growth.
Right, and the article also emphasizes the importance of research and due diligence when selecting leveraged ETFs.
Yeah.
It's not a decision to be taken lightly.
Right.
Before investing in any leveraged ETF, thoroughly understand its underlying index expense ratio tracking error and historical performance.
So much of this comes back to being informed,
Absolutely.
understanding how these tools work,
Right.
and being aware of the risks involved.
You got it.
The source really underscores this, saying the key to success with leveraged ETFs lies in a perfect blend of informed decision-making, calculated risk-taking, and a commitment to long-term growth.
I love that quote, and I think that's a perfect segue into another interesting point the article raises:
Okay.
the impact of investor psychology on the effectiveness of leveraged ETFs.
Oh, this is fascinating. Tell me more.
So they argue that the fear surrounding leveraged ETFs, often stemming from a lack of understanding or misinformation,
Right.
can actually lead to missed opportunities.
So if you're so focused on avoiding those potential losses,
Yeah.
you might miss out on the potential for significant gains.
Precisely, and that's why this deep dive is so valuable. We're trying to empower listeners with knowledge so they can make informed decisions,
Right.
rather than being driven by fear or speculation.
Fear and speculation are not good in the market.
Not a good mix, no?
The source also makes a compelling case for the relevance of leveraged ETFs
Right.
in the current global economic landscape.
Yeah, the world's changing rapidly,
It is.
with technological advancements and geopolitical shifts constantly reshaping the investment landscape.
Right, think about emerging trends like AI, renewable energy, or even specific regions experiencing rapid growth.
Exactly.
Leveraged ETFs can offer a way to capitalize on these trends.
With more targeted exposure.
So you could potentially amplify your returns in sectors you're particularly bullish on.
Yeah.
Of course, it's crucial to remember that higher potential returns also come with greater risks.
Absolutely. It's a balancing act. And that's why the source emphasizes that as the investment landscape evolves, we're likely to see even more innovative leveraged ETF products emerge,
Wow.
offering investors even more options and opportunities.
It's a dynamic field.
Very dynamic.
With constant innovation, it seems like the key takeaway here is to stay informed.
Absolutely.
Do your research and continually adapt your strategies as the market changes.
Couldn't have said it better myself. And that brings us back to a key point. The goal with leveraged ETFs is not about perfectly hitting those 2x or 3x returns.
Right.
It's about maximizing your absolute returns
Right.
while managing risk effectively.
It's about aligning your investment strategy with your risk tolerance, your financial goals, and your understanding of how these tools work.
Exactly. This
Yeah.
deep dive has covered a lot of ground, from unpacking the mechanics of leverage
Yeah.
to exploring advanced strategies
Right.
and addressing the critical aspects of risk management.
Absolutely.
But before we wrap up, I want to revisit one of the most compelling examples from the source,
Okay.
which highlights the potential impact of leverage on long-term returns, the hypothetical comparison of investing in QQQ versus QLD over the past 10 years.
That was a real eye-opener.
It was. It really put the power of leverage into perspective.
Let's break it down again for our listeners.
Okay, imagine you had invested $10,000 in QQQ, the regularly NASDAQ 100 ETF, back in 2013 today. That investment would be worth approximately $53,000.
A solid return, no doubt.
But now let's consider what would have happened if you had invested that same $10,000 in QLD.
Great.
The 2x leveraged NASDAQ 100 ETF.
I'm on the edge of my seat.
With QLD, your $10,000 investment would have ballooned to a remarkable $135,000, more than double.
More than double the return of QQQ over the same period.
It really drives home the potential of leverage.
Yeah.
Especially in a prolonged bull market like the one we've experienced over the past decade.
It does.
But remember, past performance is not indicative of future results.
Right. It's crucial to understand that there are no guarantees in investing.
Right.
And leverage also amplifies losses.
Absolutely.
Yeah.
This example is not about advocating for any particular investment strategy,
Right.
but rather about illustrating the potential impact of leverage on long-term returns.
It's about prompting listeners to think critically about how these tools might sit into their own investment philosophies.
Exactly. And to emphasize that understanding your risk tolerance and investment goals is paramount before incorporating leveraged ETFs into your portfolio.
Yeah, it really makes you think, if you had invested in QQQ versus QLD 10 years ago, how would your portfolio look today?
Right.
That's the question the article leaves us pondering, and it's a powerful one.
It is. It highlights that potential for amplified returns.
Yeah.
With leveraged ETFs, but, as we've discussed throughout this deep dive, it's not just about chasing those magnified gains. It's about understanding the mechanics, managing the risks, making informed decisions that align with your individual investment goals and risk tolerance.
Absolutely. And the source we've been dissecting today, Investment Essentials 4, How to Optimize Long-Term Investment with Leveraged ETFs. Keys to Risk Management and Asset Allocation, has provided some really invaluable insights for anyone looking to explore this area of investing.
It's a fantastic starting point for understanding those nuances of leveraged ETFs.
Yeah.
From the basic mechanics of leverage to more sophisticated strategies and that critical importance of risk management.
Right.
It really covers a lot of ground.
So for our listeners who are now feeling intrigued by the potential of leveraged ETFs, what are some key takeaways they should keep in mind as they continue their investment journey?
Well, first and foremost, remember, knowledge is power. The more you understand about leveraged ETFs,
Right.
the better equipped you'll be to make those informed decisions.
And don't let fear or misconceptions hold you back.
Oh.
Leveraged ETFs can be powerful tools, but they require a thoughtful approach. a solid understanding of the risks, and a commitment to disciplined risk management.
Exactly. Don't jump in blindly. Do your research, explore different leveraged ETFs, and consider how they might fit into your overall investment strategy.
The article also highlighted the importance of staying adaptable as the investment landscape continues to evolve.
Right.
We're likely to see new and innovative leveraged ETF products emerge, offering even more options and opportunities for investors.
It's an exciting time to be an investor.
It is.
You have such a wide range of tools and strategies available to help you reach your financial goals. And as we've seen today, leveraged ETFs can be a valuable addition to that toolkit as long as they're approached with knowledge, caution, and a long-term perspective.
Absolutely. Well, we hope you've enjoyed this deep dive into the world of leveraged ETFs. Remember, it's all about empowering yourself with knowledge and making informed decisions that align with your unique investment goals and risk tolerance. Until next time, happy investing.
And I think that's a great point for wrapping up this deep dive into leveraged ETFs.
It really is a fascinating topic. I
Yeah.
think we've just sort of scratched the surface here.
Yeah, absolutely.
But I hope this has given our listeners a little bit more of an understanding
Right.
of the power of leverage.
Yeah, and the importance of risk management
Right.
and the fact that you really need to have a clear strategy
Absolutely.
when you're dealing with these types of investments.
You can't just jump in blindly.
No, you got to know what you're doing.
You really do.
But if you do your research and you're careful,
Mm-hmm.
leveraged ETFs can be a really powerful tool.
Absolutely. And
Yeah.
as we've seen in that example of 2QQ versus QLD
Right.
over the past 10 years,
Yeah, the difference is pretty remarkable.
it's incredible.
Yeah.
And, it really just shows you the potential
Mm-hmm.
for amplified returns. But again,
Got to be careful.
got to be careful.
Got to have a plan.
Exactly. Well, we hope you enjoyed this deep dive.
Yeah, thanks for listening, everybody.
Until next time, happy investing.